Bismillahirrahmanirrahim. Alhamdulillah wa bihi nasta'in. Assalamu alaikum and a very good morning to everyone. I'm very pleased to be moderating this session. Before I proceed further, I have the pleasure to welcome to the stage two distinguished panelists. Monem, Salam from Saturna, Malaysia Sdn Bhd, and Najmuddin Muhammad Lutfi, BIMB Investment Management. Okay. Welcome everyone to the 8th session or a panel of this important program that we have had attended for the last 1.5 days. This topic of our session, I would reckon, is the most important topic because I'm moderating this session. Put aside the joke, we are talking about how to become relevant to our each and everyone in our community. And Islam is about being relevant. When Islam is not relevant, finance will not be relevant as well. So this is the whole hypothesis that I'm putting across the two panelists and all of you. If I may, give me about 1 or 2 minutes to give some the mindset of Islam as far as relevancy is concerned. We know the story of Prophet Yusuf alayhi salam. He entered the city of Cairo 2 times. When he was forced to enter into the city for the first time, he has no value. In fact, he was bought at a very cheap price. Bisamanin bakhsin, very small price, because he was not relevant at that time. He was bought, sold, and he was sent to prison for whatever reason that you know of that issue. The second time he was invited to come to the government administration of Cairo because he was relevant by then. So being relevant is very important. In fact, I can go on and go on to show to you without any doubt that we have to make ourselves relevant. Though we wanted to portray and propagate and propel whatever theme that you have, either social, responsible, either sophisticated product, you have to always look into the very basic alphabet of being relevant to the society. And this panel is very important, and I'm very happy because we have 2 panelists who are known to be articulative. They can speak their mind, they can challenge your perspective, challenge their own perspective as they move forward. So this is a session for us to really open up the discussion. I would appeal to both of you gentlemen, make your comment brief. Of course, to you as well, make your question shorter than short. Many people tend to give khutbah, preach when they ask the question. We don't allow that in our session. Wanted to have more time for interaction. The more interactive we are, the better for our mind before we go to our break later on. So welcome, Raza Monem and Najmuddin for this important session. Basically, if I may summarize the whole thing, are we relevant in our products to the man on the street in terms of understanding, in terms of value proposition, in terms of cost to them, in terms of return, the bottom line at the end of the day? A very wide opening remark from 2 of you. Are you happy with the current product offering, or we can do it better? Perhaps one.
Yeah. Assalamu alaikum. Very good afternoon to everyone. Thank you, Dr. Daud and Monem. Good to see you. And ladies and gentlemen, whether we like our product, right? The thing is, for myself, my experience has always been the retail side with the retail investors. Yeah, I have had experience doing retail products when I was CIMB, when I was at Goldman. Now I'm with BIMB at Bank Islam. So, of course, at BIMB Investment, we are a full-fledged Islamic fund management house, been around for 20 years, and all our offerings and products are Sharia compliant. And every time we want to launch a product to the market, to the retail market, of course, it's a long process. I mean, the first step, you have to actually have an investment case, go through the investment committee, then you go to the Sharia committee, then you go to the audit committee, then you go to the board. Yeah. So there's a lot of process, and there's a lot of scrutiny along the way to make sure you have that balance between, a good product for the retail customers and also for the company to be able to raise the assets. So do we actually have the right product for the clients? Yes, we do. Because when we have a product for the clients, for the retail investors, we make sure that it's the best product. But at the end of the day, of course, then the retail investors have to judge whether the product is good. Yeah? The thing is, when it comes to investment, a lot of people talk about returns. Yeah? Bottom line, everybody, I think when this was discussed yesterday, everybody talk about what is ESG. I mean, if you cannot deliver returns. So it's always that conversation, returns, performance. But one thing that what we lack in terms of the conversation with clients or retail investors is on risk. Risk of investing. People don't know the risk volatility of equities, the risk volatility of fixed income or sukuk or money market. It's different risk profile. We talk about risk-adjusted return.
But how to dilute that understanding of risk and return for the retail investor? How can we put the capsule for them to swallow and be able to make decision next day or next week?
I think this is something that, for example, for Malaysia, in the Malaysian context, we have the Federation of Investment Managers, the FIMM, that basically a statutory body that sits between the regulators and the industry. They make sure that we actually articulate and talk about this first. We actually have a template when we do conduct training or engaging with the customers. Yeah? So the disclosure is getting better now in terms of risk disclosure for client. A lot of the time, clients or investors don't actually read that heavy, thick prospectus or info memo. Inside there's a lot of disclosure on risk. Specific risk on the fund. If it's a foreign fund, there's a specific risk on currency. Yeah, the risk that the managers take to manage the portfolio. This is something that retail investors need to start to look at. Don't just look at performance or returns, because high returns do come with high risk.
Okay.
Thank you.
Thank you, Professor Wan. Monem, do you have anything to agree or disagree, or to have your own worldview altogether of how to make our products more retail-centric?
Bismillah, alhamdulillah, salatu wa salam ala rasulillah. No khutbah today, inshallah, but I wanted to kind of touch on that. And I pre-warned Najmuddin that I would be disagreeing with him a little bit, because it kind of livens the presentation. So let me give you a brief background, just so that you have an understanding of the context I'm coming from, and then I'll talk a little bit about risk and those type of things. So I am from the US. I joined the Saturna Capital, which is the parent company for the Amanie mutual funds. And if you remember from maybe yesterday's panel, Amanie is the largest publicly traded equity fund in the world. It's about 3.5 billion under management. In 2003, when I joined, the assets were about 40 million. And what I decided to do was to go out and mosque by mosque, visit Muslim communities all across the country. And so in a period of about 4 or 5 years, I visited about 800 different mosques and gave presentations on Islamic investing and also the funds and those things. One of the things you have to keep in mind is, yes, people are very, very geared towards the returns. But the reason why they're geared towards returns is because that's what everybody pushes them on. If you're going to tell them, buy my fund because it's giving you 20% and this fund's not, and another person goes there and says, well, mine's giving you 15% and this one's giving you less, the mindset of the customer always becomes, well, what are you going to give me? It's irrelevant about the risk. So one of the things that we did was in the presentation was, or the fundamental reason was, if we can educate the investor, at least in the US, about the importance of Islamic investing, then the risk becomes more important than the returns itself. You talk about returns, but you do it towards the end of the presentation. What you talk about throughout is if they can buy the philosophy, then what's going to happen is they're going to be able to stay in and weather out any downturns that happen in the market. And in fact, if you look at the subscriptions in our fund, every time the market is down, NAV is going down because the market is going down, but the subscriptions into the fund, actually from the Muslim community, end up going up. And we've been able to do that over a period of time to be able to make them understand that when the market goes down, that's a market on sale, but you buy more, just like you would go out and buy a sale from a clothing store. You do that over and over again, people begin to realize and change their mind frame from the idea of, oh, I don't want to read a prospectus. Well, nobody's going to read a prospectus. Even advisors don't read prospectuses, right? It's more a matter of what are you going to be telling them about why they should be buying the fund. If you're going to tell them you're buying the fund because of our Islamic investment philosophy, we're value investors, we're going to manage your risk, and oh, by the way, out of all that, we also have a great return. Then their mind frame switches from being away from return and more towards why they're fundamentally buying the product.
Thank you very much. I think if I may go a bit deeper to the Malaysian market a bit, then we can go back to the other part of the world. Let's say middle class in Malaysia, among the Muslim community, they are very much comprised of the government officers of the certain class. And most of them, if not all of them, they are very much engaged in debt-based consumer financing. They take the salary, they tend to pay back the borrowing for their cars, for whatever they are supposed to do. And they're not putting any part of their money into the product that you are selling in the market. And perhaps they have not been educated. That's why when the moment they retire from the government job, they become no more middle class, they become different class altogether. Unlike the other communities in Malaysia, they are really middle class all the way because they generate the income, they can sustain the income, they can sustain the lifestyle after they have retired. So what should we do to educate our middle class Muslim in Malaysia to put aside their investment, their salary if you have, their bonuses, to grow for the future? When they retire, the wealth will work for them. For example, margin financing, instead of giving them money to buy new cars and whatever, we can have a scheme to educate them to plan for the future. This is something that I've seen in the data. Many of them, when they retire, they become different class altogether. Perhaps Monem and Wan wanted to comment on that.
Well, the good thing is we have the solution for that. It has been around for many, many years. Retail investors or retail, you and me, most retail have a very simple mind and simple thinking. A lot of people, a lot of retail don't know about finance, don't know about investment. I think they know 3 or 4 things. They know saving, I go to the bank and put my money in the saving, but most of the time they don't really think about inflation. Second, loan. I want to have a car loan, I want to have a housing loan, and then a credit card, And the other part is investment. When they think about investment, they think about stock market and to some extent properties. Generally in Malaysia, people either buy stocks or properties. The last 10 years, we see the shift. After the Asian financial crisis, a lot of people got burned from the stock market. Now everybody's shifting towards the property. But the thing is, of course, when you invest in properties, this is a long term. It has to be a good, sound investment decision. If you buy property somewhere outside KL, you may not get the appreciation. But the thing is, actually, for collective investment scheme, when collective investment scheme like unit trust, mutual funds develop, it's for people, retail people, low middle income people to actually have access to investment. Because how collective investment scheme work, basically we pull the money into one fund, and you'll be able to access all type of asset class, whether it's equities, whether it's fixed income, whether it's real estate. Yeah. So this is one form of investing, saving, and the good thing is you don't actually have to come up with a lot of money. Yeah? You can actually invest as low as 100 ringgit.
I understand that one, but how can we go out and articulate and convince those people to shift their paradigm shift from becoming more wealthy temporarily rather than creating the wealth for the future? So this is the challenge of middle class, Muslim middle class in Malaysia. I think we have to solve that problem from tomorrow, because otherwise we are still trapped in that kind of consumerism debt forever, and that would defeat the whole purpose of having social responsible investment, because it's about future, about maintaining the lifestyle, about giving them what went wrong.
So let me jump in if you don't mind. Do that. So I think this is it's not a one party or not a one solution for all, but I think there's multiple parties. They need to come together to be able to do something. So the first thing you have to understand is on a scholar level or on your Friday khutbah level, people need to be reminded that debt is not something that's promoted in Islam. Like, this is something that's bad, okay? Let's be honest with each other. So, and especially if you go on the interest side, the punishment for what it is to be debt with riba. Okay, that's never what you should talk about. That's the one thing. The second part of it is the government, meaning the government needs to come up with tax decentives or penalties to taking on more debt for consumption purposes. That's the second way. The third way is for our industry, this is where we come in, to be able to promote this idea of having a safe retirement, maybe making more aware of the fact that you do get into another class of people once you do retire, but here is how you actually prevent yourself from doing that, and that would be the way to go. Now, that being said, why is it that people don't save in Malaysia, especially amongst the people? The first part of it is obviously they want to be able to have that house and those type of things. But one thing that's actually talked about in the program also that I want to touch upon is, and this is not particular to Malaysia, it's all over the emerging markets, the fee structure amongst all of these mutual funds or collective investment schemes is way too high, right? I mean, imagine, for example, if I put 1,000 ringgit into a fund and it's a 5% commission, I'm already starting with 5% below whatever the benchmark is going to be. And then there's a 2% fee on top of that. So on every year, the fund manager has to make up 2% before he actually beats the benchmark itself, right? How is he going to do that, or how is she going to do that? They have to take on risk to do that. And so that's a fundamental thing, that if you can reduce the fee structure, right? Every Muslim is looking for a good deal, just like everybody else is in the world. So if you can reduce that fee structure down, it'll promote more investments going forward.
Yeah, actually, for fund managers, I mean, we don't look at the fees at all. I mean, the only fees that we take from fund managers is just the management fees. I mean, the fees to cover our cost managing the portfolio. Yeah, a lot of these, what Monem said, and a lot of these fees, the upfront sales charges, this is for distribution. Yeah, but the thing is, investors do have choices. Yeah, if you look at mutual fund, yes, they do the 5% and then 1.8% at the back end. But there's also an option you can actually invest in ETF. Yeah, ETF you only pay 75 bips. But of course, with ETF, the investors need to do their own research and buy the ETF themselves. Then of course, you can also go online. If you go online, the sales charge is much lower. But again, when you have to do, when you do on your own, of course, the sales charge is much lower, because the high sales charges because you get that advisory from the financial advisors, basically paying for their time, paying for all the collaterals. So actually, investors in Malaysia do have that choices. Yeah, I mean, whether you go to mutual funds, whether you go to ETF, whether you go to a bank, whether you go to an agent. Yeah? But the thing is, we still lack that awareness, where, for retail investors, which channels is the most cost-effective to actually invest.
Okay, let me come to the third and perhaps the last question for this round before I would open the floor for any interactive and engaging question from the great mind of the audience. We have heard about Khazanah Nasional Berhad SRI Sukuk. Of course, the investors are basically the SRI sensitive investor among the corporate sectors wanted to put their own SRI through Sukuk, which are at the end of the day undertaken by Khazanah in terms of default and what have you. And this has gotten a very high rate of a triple A, if I'm not mistaken. Moving forward, I was made to understand Khazanah is planning to go for the second one the SRA Sukuk, but to be open to the public to subscribe. People like you and I, we can buy 100, 200, 1,000, whatever the denominator would be in the future. Are you positive about this approach that people will come and run and rush to buy the SRA Sukuk, or there could be some problem, and how to overcome the perception and the attitude of the public, people like us, when Khazanah were to issue, if they were to issue perhaps this year?
So, Bismillah, the Khazanah Sukuk, mashallah, it was a very pioneering Sukuk, and I think that more of that needs to be done. But that being said, on the retail level, I don't think it's the right audience to be able to buy something like that Khazanah SRI Sukuk. And the reason why is because, fundamentally, for example, that Sukuk will not pay you back if the certain benchmarks are met from the education. And if an investor goes into it as an investment and they don't get their investment back, that's going to be problematic. So they have to really understand that this is actually an investment, quote, sadaqah, more than it is anything else.
Perhaps they can, the first one they opted for step down. Perhaps step up. Perhaps now they can go for step down, because in any case, the investor will get some payment. If the SRI perform, then they will get a bit higher. And the other way. Perhaps we can appeal to the wider investor, because the first one cannot appeal to the other investor because it is not a fixed income. It is purely SRI. Perhaps for the second one, they can make in such a way that it can appeal to both angel and human, if you like. Are you following? Any angel over here? Plenty. One.
Okay. The things about sukuk in general, or bond, it goes back to the risk. Yeah. And we for Malaysia, we are in a market that the interest rate is high. The available products in the market here for investors, particularly retail investors, I mean, you are overwhelmed with choices. Yeah? I mean, for Bhumis, you already have the ESB, the ASN. I mean, these funds have a track record of 30 years with 8% annualized return. And this has always been a challenge for fund managers here in Malaysia. I mean, that's pretty much the benchmark. And of course, you also have tabung haji that, give good annualized returns. So for sukuk proposition, this is your benchmark. The thing is, if you look from a risk perspective, yes, it makes a good investment case. But if you look from a return perspective and you have all these choices, it can be quite a challenge to make that decision. I mean, that's what I face in the retail space.
Okay, thank you. Can I invite some audience to interact with the panelists? Can I see some hand, if any? Yes, please, sir.
Good morning. Stuart Hutton from Chief Investment Officer at Simply Ethical. You've talked a lot about the funds and the product, and you've talked about the fees and the various things. But one thing you haven't covered is about actually the investor understanding why they're doing it, what the purpose is. You've touched on it around that focus, but perhaps we could hear a bit more about maybe how it connects through to actually them understanding why they're actually doing this, why they're making these investments, and why these products that we tend to focus on in the industry are important, but maybe we could actually expand it to what it means to them.
Well, these roles, it's a role that has to be done by many stakeholders. I think for Malaysia, there are a couple of entities that involve in delivering the product. Yes, we're the fund manager, we develop the product, we manage the product. Then it goes to the distribution. And who are these distributors? In Malaysia, largely distributors are the banks, the financial institutions. Why make sense for the financial institutions or the banks? Because they have access to clients. They have millions of customers in their database. Of course, the clients are from the deposit side, from the loan side. So, and then of course you have regulators, and you also have statutory body like FIM that protect investors' interests. So there are many parties that need to come together to actually continue to actually educate clients on the risk return. Although this subject matter has been discussed so many times, but in reality is, in the retail space, at least here, people don't look at 3 years track record, 5 years track record. People don't look at Morningstar rating. They don't look at capital preservation, consistency of performance, total return. There's no such discussion because it confused them. Yeah, they are not finance people. So it's very important, the financial advisors. At the end of the day, the one that actually interact with you is the financial advisors. Yeah? Unless you do it yourself. You go online or you go to a stockbroker and buy ETF. But the financial advisors, what I've seen, unlike the private banking side, you have much more sophisticated financial advisors. But on the retail side, a lot of these financial advisors are product pushers. They need to meet their monthly sales target. So that conversation on risk, it's something that they don't discuss because their clients that they come in, this is database that they have, and say, oh, they have loans, they have deposit, they look the whole total portfolio. Okay, I can actually target these clients because he has R1 million in the deposit. So the conversation will be on returns. And the thing is about financial institutions in Malaysia, they don't carry one fund house products, they carry many fund houses products. A lot of the banks have 200 over products. So what they do, they actually look at returns. Forget about volatility, forget about Morningstar rating. Who give the best return? So it's easier for the financial advisors to have the conversation with the client. Yeah. So that is the reality. Yeah. But I think for Malaysia, the federation and the regulator keep on emphasizing this, and they actually put the pressure to fund managers, make sure you have this disclosure, and that's why we have this thick prospectus, which will never end up with the client. It's always, so.
I mean, I've been in Malaysia long enough to know now that, that's the fund manager, the distributor, and the bank all are the same entity, pretty much the same. They're all distributing amongst themselves, and that's why you pay for that. And people, they're meeting KPIs because they have 5% to be able to get, and they need to make a paycheck at the end of the month. I mean, it's not, you're not in the best interest of the client, you're in the best interest of yourself. People in the US, UK, Australia, Hong Kong, the world is coming toward a place where commissions are being regulatorily banned from doing that. And if Malaysia wants to be coming up to the level and on a global level, it has to be able to do the same thing. You cannot put a financial advisor's incentive on commission, but more on asset fee based or something along those lines to be able to make them one with the client on the same side as a client so that they can truly choose a product that's going to be better.
Okay, we'll come to the second question later on. Perhaps we can put on the stage some voting question, they call it, session 8. Can we have that slide? Okay, so you have only 3 options. Don't go for the 4th option, okay? So you can read yourself on the screen and try to give your feedback whenever you can do that, okay? Our retail sukuk, the key to promote a more robust and expensive saving culture in the emerging market. Perhaps one has commented just now. I think if you ask him to give the answer, he will definitely, I don't know.
Well, it goes, like I said, it goes back to the client. Okay. What is their risk appetite? Yep.
Okay. Yes, please.
Is this working? Yeah. Assalamualaikum. I'm Joanne Enriquez. I'm a student at INSAFE. I would like to address the question to the brother who went mosque to mosque to educate people on investing. I wanted to get your buy-in on perhaps taking that slightly more basic and bringing it to the schools. For example, the Khazanah Fund, the Khazanah Sukuk is for education. what if we make it almost compulsory to, let's say, high school students to have Islamic finance? Because this also answers the questions, where do we solve the problem? We should start teaching our children very early on how to save. So this sukuk of Kazana is for elevating education and making sure that the Malaysian educational system is up to par, the public education. Instead of having a metrics on how the teacher are performing, perhaps we can have a metrics on how many kids have we now taught how to save.
I think it's a good point, but the issue is this is a world problem. It's not a Malaysia problem. Nobody teaches there, even in most of the world, they're in the high school level or below. They don't teach about finance, let alone Islamic finance. So I think yes, it's possible to do that. How to do that? I think it would be beyond me to answer.
I think I was working in Kabul, Afghanistan, for about 6 months to set up their infrastructure, and we are thankful to the donors, and donors are SRI group of families in Europe, most of them from UK, from Germany, and some Switzerland families. Million are being put to redevelop Afghanistan, because I agree with them 100%. The Taliban issue is not about ideology. They are ideologyless, but they are moneyless. So we have to create the job for them, we have to put the school for them, we have to put the factory for them to become away from the bad ideology that they have. So this is what the SRI investors, not known, not visible, but they are the real SRI investors. I have seen them, I have met with them together with the Central Bank of Kabul. Of course, I have to put my bullet vest going out and coming out. Interestingly, to respond to your question, the IFC has set up their own office, working with us to put the first ever cartoon in the world about financial planning, which is happening in Kabul in 2 languages, in the Dari, their normal, and Pashto, the Persian version of the language of Afghanistan. I have not seen that anywhere in the world about even financial planning, not even about Islamic financial planning. So this is something which is missing a lot. I was hinting to the 2 brothers just now, what can we do more to really educate our people, which is not happening at the moment. So we have to learn from Kabul sometime. Okay. Third question, if any. Yes.
Salam alaikum. My name is Tawfiq Abdubrahim from International Islamic University. Actually, I have a question regarding about the quality. How can we define the quality of Islamic product investment compared to the other products or investment that are available?
Yeah.
To define it and to distinguish that, to motivate the retailers and the Muslim to.
It's a big question, to be honest with you. Because quality, if I can answer on behalf of the panelists, is a living organism. Quality is not static. It's not stagnant. It's a living organism evolving from one society to another. In some countries, for them to get a bank, to put the money in the bank is quality for them, because they cannot afford to put their money under the pillow anymore. For some market, they need more than that. So we have to see the quality in various stages of our communities, from Alaska to Antarctica, for that matter. So the quality shouldn't be static, shouldn't be stagnant. It should be a living organism and has many facets, if you like. So that will answer your big question, because we have to take the challenge. In fact, we can ask them to give you a comment, but if you wanted to comment, yeah, it's a living organism. We have to deal that as such. Yeah.
Dr. Daud, if I may add, when it comes to assessing the quality of the Islamic investment, similarly like other investment, when we construct the portfolio of the investment, if it's equities, I mean, we look at the securities, obviously it has to be Sharia compliant. But for investors, yeah, I mean, rule of thumb is, before you make an investment, look at the track record. Minimum 3 years. Yeah? Look at the performance of the portfolio, at least 3 years. Yeah? How it compares to the peers, how it compares with the other funds in the same asset class or the same category. Yeah? If they consistently outperform their peers, yeah, look at consistently perform on the capital preservation for the last 3 years. I mean, that's a basic indicators of how the quality of the investment. I mean, you have independent fund rating agencies like Morningstar and Lipper. I mean, it's publicly available. You can go online, you'll be able to look at the performance of these funds. So that, I mean, for retail investors, that's something that we always tell the investors, before you make that decision, look at the track record.
Okay, I will come to the second round, but I wanted to end my presentation, my list of questions to the panelists, and we can open to the floor to the end of the session. In Malaysia, we have launched our investment platform a few weeks, if not a few months ago. That is a new platform in the world, opening the opportunity for retail investors to put their money through the bank, and the money should go to the selected SME that investors are keen to take the risk of those SME. And this will be the new baby of our industry. We wish them all the best. But I wanted to put to you, perhaps the audience as well wanted to interact with me, if this is a good product, why should we limit to asset banking only? Can we make it open to any other financial institution to make it available on the nationwide rather than limited to Islamic financial institution? If it is good in terms of bottom line, in terms of value creation and value proposition, why should we limit? Because now we have to share the good value to the whole community. So my provocative, thought-provocative thinking would say, don't limit, open up to everyone in the country. What will be your comment, one first?
Well, investment account, basically, you are investing in the real economy, in real asset. Yeah. Investment account is an alternative to the fixed deposit that we're so used to. So, of course, with investment account, there's opportunity for you to get better profit rate than the fixed deposit. Yeah, Islamic investment account. So that's where the opportunity is. I guess this is something that the biggest question on this, I think the challenge to this is because we are so used to fixed deposit and the guaranteed by BIDM, you know, that is the challenge. So a lot of the awareness have been created surrounding investment account, but we have seen growth so far. But I think for retail investors, retail depositors particularly, they still don't quite understand how this investment account works. I mean, the structure to it, you know, the underlying to it. Because I think when they hear that their money is actually investing into probably some entrepreneurs and SMEs, not quite sure how they will take that from a risk point of view.
The crowdfunding is, you know, has proven to be a new wave, a new movement in our entire world. Why can't the same success story be replicated and recycled for this investment platform, which are championed by the bank themselves, very regulated, very transparent? So why can't this be better than crowdfunding? I mean, I'm not asking you.
So, I mean, I completely agree with Dr. Daud. I think that the more you open up the actual platform, the more quote-unquote liquidity you're going to get in the system itself. And the more checks and balances on the SMEs that are coming to the platform. I mean, the more the better. And the more money's coming in, more SMEs are coming in, you're getting more transparency, more people doing their due diligence on the companies that are coming in. All of these things are happening. So I would hope that this is the first phase. And then the second phase, once it's been piloted and tested, would be to be able to open up to a wider audience of institutions, but also individuals of high net worth or beyond.
Okay, great. Now we have about 7 to 8 minutes to conclude the session. We can open as many questions as possible. Be brief, short, and sweet. I think I start at the back. We can go down. Yes.
Good afternoon. My name is Ahmed Fauzi from Egypt Embassy. My question is, if we look at the cycle of the finance product. There is the customer who's already thinking about the Islamic principles, and this is why he wants to buy. And then the product itself, where there is like Sharia committees that define that it's according to the Islamic principles. But I feel sometimes that the institutions themselves, the funds, the banks, they are just doing the thing in a conventional way. They are not doing real musharaka, real murabaha with the customers. They are not giving them real investment advice, how to. Is this correct in your opinion? Or?
It's wrong, 100% wrong. Because Sharia finance is about debt and equity. Anyone wanted to segregate between the two, they are going against 1,400 years of documentary evidence. So you have to go back to our literature and check every single page of our civilization, which provided the leadership to humanity based on so many products, debt, tranching, security, collateral, equity, that suit the society at any given time. So this is the evidence of 1,400 years ago, and not the new theory of economic which emerged, Adam Smith, 200 years ago, 18th century of AD. So we have to go back to our own original. Don't take from the secondary resources, go for the primary sources of history, our civilization. Islam is about giving the choice. Islam is about risk and return profile. So this is my my answer to you on behalf, hopefully on behalf of the panelists.
All I have to say is Amin.
Okay. Okay. Next, yeah, please.
Hello, my name is Mehmet Onay from Central Bank of Turkey. Actually, I don't have a question. I will just make a contribution, a little contribution, if you allow me, about the earlier discussion about whether the initiatives on financial awareness by governments are enough or not. I just want to say that in Turkey, as the central bank, we have some initiatives. First of all, we have a web page dedicated to financial education on our website, and also we have a campaign for increasing awareness of children about the importance of savings and whether how they should use cents and keep them or use them in daily life. And also, from time to time, our senior managers, our governor, in their speeches, they talk about the consumer behavior in the sense that they should use consumer loans instead of using credit cards for financing their daily purchases, because the interest rates are
well
higher.
done. I mean,
there are examples like that. I just wanted to make this contribution.
Thank you. My wish as a brother to Turkish brother, perhaps you can use manage your fund well on the jersey of Galatasaray football club.
Yeah.
We have to go down to the people. This is what I'm trying to say, because we have done a lot, but we have not gone down to the people on the street. Go for your, either you are supporter of Galatasaray, I'm not so sure.
Yes, I am supporter of
okay, then we are on the same page.
Thank you.
I'm also their supporter, so.
Thank you.
Okay.
I think Dr. Daud makes a very, very good point, and that is, I mean, alhamdulillah, I mean, when you actually put a website for education, who are you reaching out to? I mean, think about it for a second. I mean, who's going to be the one who's going to read the website and be able to learn from the education? Likely the person that already knows half the stuff that's on the website. So what Dr. Daud's talking about is how do you get even to the more common person? And that's really the challenge, I think, that we need to address.
Okay. Dato, if I just add to the comment just now, I think for Malaysia, under the MIFC initiative, I mean, that really helps because it built up the whole ecosystem of Islamic finance, and now they are progressing into responsible finance and investing. So for Malaysia, the initiative of the MIFC encouraging more Islamic intermediaries. I mean, now they have more than 20 Islamic banks, 20 Islamic fund management houses. I mean, when you have these intermediaries and you are supported by ecosystem like INSIAF and all that, I mean, that really helped to proliferate, more products into the market and for customers and investors to have access to more Islamic products. And the fact that we have discussion on ESG today, how we actually converge ESG and Islamic is fantastic. And we at Bank Islam, I mean, this is the very thing that we have done last year. We actually converge the ESG and Sharia, and we launched a great product for the market last year. And when we look at the profile of the product, when we combine ESG and Sharia, when we look at the volatility, it's much lower. You know, actually the product delivers a equity performance with a bond or a sukuk type of risk. Yeah? So that is something, an outcome of the top-down, I mean for Malaysia, encouraging fund management, Islamic fund management, to continue to innovate. When it's thinking about how do we converge Islamic finance and ESG, we respond to that, and hence we have delivered that last year, and hopefully over time, you know, we continue to have this product, and we start seeing the convergence between Islamic finance and responsible finance.
Thank you. I'm afraid I have to stop the discussion at the moment. Surely you have so many other questions, but at least you can take away some of the thought process, how to make our products relevant to the people on the street. Before I end the session, perhaps we can conclude by having the last one on the slide, the close of session question. Can we have that on the slide? Yeah, so please choose the most important responsible funding product from your perspective that you would like to see in the next few months, if not few years. Okay. I think allow me to thank the two panelists for their interactive session, for their powerful thinking process they have shared with you. Can we put the hand together to the panelists? And my last word to conclude is that we have to do from time to time the reality check. The reality check is very important, because the more we progress further, the more we have to stop for a while for checking what we have done, what can be done better. In fact, for the retail sector, we have to bring to our audience, not people like us, people from the public figures in the society, the bloggers, the ones who are having followers of 3 million, 4 million, to come, to be educated, and for them to go back to the society to convene the people, because they are more powerful than many of us. They are more powerful than our prospectors. Thank you very much.